Hello, this is Joe Pryor with virtualrealestateteam.com in Oklahoma City, a part of Redbud Realty and Associates. And I want to talk about investing in real estate today, especially investing in my market, the Oklahoma City market. Now, from about 2004 to 2008, we had a tremendous amount of national and in some cases international investors investing with me and other people in long-term rental property here. The market seemed attractive to them in those years. Despite the fact there were some pretty hot markets out there. What they liked about us was that our economy was stable, our housing market was stable and predictable, our vacancy rate was extremely low, so you didn't have long to wait for your property to rent, and our cash flow was very, very positive. So for conservative people, this was really a strong market to invest in. Well, 2007, 2008, we started to see a change in the market, especially in 2008 on. The market just melted down, and in some of our markets in the United States, some cities went down 50 to 80% in value. And for a couple of years here, we have seen people kind of going bargain shopping because of condos in Las Vegas or in Florida, or properties really far out in the exurbs in Phoenix, for instance, look very attractive to people, and they looked attractive to me too. But the problem is this: those markets still have a lot of volatility to them. In fact, a report came out today of the top 25 markets in the United States, large cities, that are leading the country in foreclosure action. And I was kind of fascinated by the fact and surprised in a way that 17 out of the 25 worst markets in the United States were in Florida, where anywhere from 10 to 12% of prime mortgages were defaulting still, and 30% and up were defaulting on subprime mortgages. What this means is a lot of these Florida cities, places like Las Vegas, for instance, are still having a downward pressure on their values. And so if you bought in those markets, you're still in danger of losing 5, 10, 20 to 25% more value as these foreclosures come on the market and flood the market and really control the market pricing, which, again, these are much cheaper properties than you can buy if you buy something from a private individual. And so people are starting to come back to markets like Oklahoma City. They're conservative, long-term investors that want market stability, and Oklahoma certainly has that. Oklahoma City, since that meltdown, has not had a meltdown. In other words, our housing market has maintained stability because we didn't have a lot of subprime mortgages. In fact, about 5% of mortgages here are underwater. That's the lowest in the United States. So we didn't need that because our values were good. We're 9% below the cost of living. We have the lowest unemployment of cities over metropolitan areas over 1 million in the United States, and we're leading the country in the growth of personal income. These are all strong factors. Now, is it something where, you'd rather gamble in a market and take a risk? That may be so, but right now we're running anywhere from a 1 to 3% vacancy rate. Every property that we're selling has cash flow. So this is the important thing. If you're looking for income, if you're looking for stability, if you want to make sure that you're not hiding your money under a mattress and it's losing value there, I think Oklahoma City is the place to be. Now, one suggestion I have for you, like with the gentleman from Los Angeles I was with yesterday, is to look at short sales, because we do have short sales. All markets have short sales. So if you can take a positive cash flow, low taxes, low insurance, high occupancy rate, and then you can still maybe go $20,000, $30,000, $40,000, $50,000 under value, that's the way to buy. Now, I want you to know that we can target what you want. We can target the areas, we can target the price ranges, the kind of renter that you want. I can buy list foreclosures. I can buy list and find out who is 90 days late, and normally in that case, these are people that are not going to make it up. And I can then target those people, talk to them and say, do you need a short sale? And if you do need a short sale, I have an investor. So let me give you this call to action. If you're an investor looking for a really good deal, if you're looking for high occupancy, if you're looking for strong, positive cash flow, a linear market that is not going to be going down, the lowest unemployment in the United States, and that seems like a good investment for you for the next 5, 10, or 15 years, then get in contact with me and let's work out a plan for you. We have a total turnkey operation here. We have mortgage people, we have insurance people, we have some of the best property managers I've ever seen, and so you're totally taken care of with what you do. And by the way, that property manager and I work totally together. I look at it from a value point of view, I run numbers, and I give you a return on investment analysis, but the property manager has also got to approve of things. We want to make sure that it has a high rentability factor in the right areas for you with upward mobility to the pricing so that you have a really good exit strategy. So if you want a total solution in a great market, contact me. We'll work on the short sales and foreclosures for you here. We'll get the right property for you. We can take care of you after the sale, and we want to make sure that you're happy with us. We would like you to buy more, and at some point you're going to resell your property, and we'll be here for you for that exit strategy also. This is Joe Pryor with the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values with the speed of technology.